Hello and welcome to another update video about ADA. I thought we'd take a quick look at the overall bigger picture first, and then we'll take a look at the smaller time frame for ADA. Here I just wanted to explain again the bigger picture, that the white scenario that assumes that a larger degree wave 2 bottomed in June 23, that's still valid, and we can say this was a 5-wave move up, which topped in March 24 at around 80 cents. We're now in a pullback, in a so-called wave 2 pullback labeled WXY, and then from here we can watch for a third wave up, then a 4 and 5. This is a plausible scenario. The third wave would be a 5-wave move as well, and we haven't started that third wave yet, and it should take us to around about $1.75 plus or $1.72 plus. Wave 5 should get to 236 or 295. Can always go higher. It depends a little bit on where that third wave ends, but obviously first, so I don't show this chart so often, we need to turn around here somewhere, okay? And it's important, it's quite important that the market turns around before we break below 29 cents. Below 29 cents, that's obviously the last, let's call it reliable support for this corrective pullback, because below 29 cents, it will become much more likely that we'll see invalidation. And the invalidation point is at 21.5 cents, 22, 21.5. That's the June 23 low. Any break below it will clearly formally invalidate this 1-2 setup and will then lead to a, you could say a break. Well, it will lead to a break below that, invalidation point, obviously. And that will mean that we're morphing likely into the purple count, which just allows a slightly lower low in wave 5 in purple, or even yellow wave C, which can take us much lower. So next main support below the June 23 low is at 13.2 cents. So I'm not saying we get there, but it means until we see a reversal to the upside from the current price region, and the bulls really need to turn up here to make it happen, right, before invalidation, then it is not unlikely to see those lower levels. Okay, very, very important to understand. We're not bullish yet on the smaller time frame. It requires a little bit of more evidence from a structural point of view. Reward to risk for a bullish scenario, of course, really good here, always good, just before invalidation. However, there's just from a probabilities point of view just not that signal to confirm that we're turning around to the upside. But let's take a look at the smaller time frame. Quick reminder, today I'm going to send out the newsletter. We do that like usually Friday, Saturday or Sunday. So if you want to receive it, there's an update about a cryptocurrency. There's going to be an update about one of the major indices, a general market update, mindset stuff. You can find a link for the free newsletter in the description, and it takes you to our website where you can just register for free, and then you'll get that every weekend. Of course you can cancel, but it's free anyway. So looking at the shorter time frame, this shows us a little bit more detail about how the microstructure could unfold. At the moment, you can see we are squeezed between support and resistance. So the market is just ranging at the moment without clear direction. Quite sad at the moment, quite boring. Resistance levels haven't changed since the last update. The next ones are 36 to 37.8 cents. Then they are the next ones with 37.5 as another key level in between. To the downside, we've got 29.8 to 31.8 cents as support. So we're currently moving between support and resistance. The white count shows how we could move lower. If that's still white wave 2, will be determined by the bulls. Do we hold above the invalidation point or not? For now, I can tell you that from the lows, there is nothing that's clearly bullish yet. Upside momentum, however, is also not broken. So obviously from the 6th of September low, we can say we're in a weak, moderate, but ugly uptrend, which could still stretch higher. The next pivots to overcome for the bulls are 37.5 to 37.8 cents. I'd say it's going to be difficult for them to do it. If they do it, it might open the door to 51 cents, which would be the first ideal target for a third wave rally, which would be a first step to bullishness, okay, and that we are actually turning around to the upside. But really we need all 5 waves completed from an Elliott wave point of view to really confirm that we're going bullish. It might take 5 waves to around about 56 cents or higher to do that. However, we're obviously far away from that. And the first rally between the August low and the 24th of August high, that was a very clear 3-wave move. and therefore this move to the upside can only be a diagonal pattern. So it is extremely difficult to track the microstructures, and we have to be on high alert and basically watch the chart for any changes quite closely. For now, the bulls need to break above the nearest resistance area, which I just mentioned, and then take the price to 51.2 cents. But until we break above that level, the white scenario, which allows for lower lows, is highly, highly likely. And I think, I think it's very likely that we are dropping in the third wave to the downside. Very likely. Okay, I would possibly change my view a bit if we break above 37.8 cents, but that doesn't necessarily mean it's bullish. It just means it's less directly bearish, and the risk might have decreased a little bit. But yeah, for now, as long as we are within support and resistance, there isn't really much new stuff to report on ADA. That's the update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.